I'm not concerned. In fact, I think that a lot of the pain that the Bitcoin community has absorbed is because of the slow response of the regulators. If the regulators had moved faster, in order to, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. They will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulators said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it.
Hello and welcome to our channel. Today's video, Michael Saylor, who is the chairman of Microstrategy and a popular Bitcoin proponent, updates about the biggest lesson and learnings from the FTX collapse. Why Bitcoin is the only safe haven among all asset classes and why everyone in the crypto space should adopt Bitcoin. Make sure to stick around to the end of this video where Michael Saylor reveals the importance of regulation for Bitcoin adoption. If you liked the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Bitcoin, not crypto. That's the lesson. I think this week highlights the contrast between the virtues of Bitcoin and the vices of crypto. And it illustrates the wisdom of Satoshi. So if we go back to first principles, the entire Bitcoin movement got started because of a loss of faith in the currency and a loss of faith in banks. And so this has gone on since time immemorial. Banking crisis that froze customers' funds and currency crisis that collapsed their purchasing power. And Bitcoin was created as a currency that couldn't be debased, running on an open network so you could be your own bank. And the principle is, if you're your own bank and no one has discretion to debase the currency, then you're not going to wake up one morning and find out that your funds have been seized and they've been devalued to zero. Crypto and the entire movement is almost like the reinvention of fiat currency and fractional reserve banking, but instead of it being in a regulated environment, it's just in an unregulated environment. So ironically, we saw the same human behaviors here. A human being creates a wildcat bank, unregulated. Then a human being creates their own currency, like the FTT token. Then they issue a bunch of it. Then they start to leverage it and borrow against it. And then at some point, they start to misuse the funds of their customers in their bank. And they use it to prop up their currency. Eventually, the currency collapses, the bank freezes its assets. People who had trusted the bank lose their assets. People who had trusted the currency lose their purchasing power. And so this is a teachable moment because the solution is don't put your value in currencies that are controlled by human beings. You can't trust a CEO. You can't trust a company. And you can't trust a custodian. And if there's a counterparty, it's credit, it's not money.
Michael Saylor is of the opinion that the FTX debacle may hasten the implementation of suitable cryptocurrency regulations. One of the most well-known Bitcoin bulls has expressed their beliefs that the FTX issue will result in some positives for Bitcoin. According to his analysis, the turmoil will result in the loss of thousands of digital assets that serve no purpose, leaving only the major cryptocurrency and a handful of other coins in existence once it passes. Michael Saylor suggested that Bitcoiners, like himself, are stuck in a dysfunctional relationship with the rest of the cryptocurrency ecosystem. Saylor is a Bitcoiner. He claimed that the failure of the FTX digital asset exchange was caused by a lack of openness, which was the root of the problem. Saylor believes that if a firm possesses Bitcoin assets, the liabilities associated with those assets should be none else's liability. You are required to have complete openness regarding it, but that's not what Bitcoin is, and that's not what the token FTT was, he stated, contrasting the two cryptocurrencies.
And Bitcoin is nobody's liability. There is no counterparty. Anyone that joins the network is their own banker. The reason it's money is because no human being or no organization has discretion over it. So, and if anything, all of the Bitcoin memes have come back to life. Not your keys, not your coins. It's constant. And don't trust, verify. And it's sad to say that this is an incredibly expensive lesson in basic fundamentals of monetary theory and banking, and a principled way forward with your investments.
American entrepreneur is of the opinion that the current crisis will hasten the process of putting in place the essential regulations for the cryptocurrency industry. He anticipates that just a handful of digital assets, one of which being Bitcoin, would be able to satisfy the regulatory requirements. Because Bitcoin is a digital commodity, it's the least controversial of everything, Bitcoin will come out on top, the author writes. Saylor projected that the cryptocurrency industry will soon enter an era in which major institutions and big players will enter Bitcoin's ecosystem and, as a result, enhance both its development and price. Saylor's prediction was based on the fact that the industry will soon move into this period.
I think the Bitcoiners have had a very clear vision, and that's because they move forward in a principled fashion. And if you didn't buy the altcoins, if you didn't put your money in a crypto exchange, then you didn't fall short. You did the best you could do for yourself, for your family, for your friends, for your followers. There's been a never-ending campaign on behalf by Bitcoiners to convince people not to trust, run your own node, take responsibility for your own actions, hold your own keys, support an ethical, decentralized, fair, transparent protocol. And I would say that we can look at it as, well, we failed because we didn't convince everybody in the crypto world to adopt Bitcoin, but you can also look at it as we succeeded because we got the most number of people and the most amount of money to adopt Bitcoin. And so Bitcoin is still the dominant crypto asset network in terms of number of holders, in terms of value, and in terms of the amount of value stored on the chain. And so although we haven't convinced 100% of the people to agree with us, we've convinced the most of the people to agree with us. And this week is another educational lesson. And I, as a newcomer to the space, I've only been in it for about 2.5 years, I observe that we are making great headway with mainstream investors and mainstream media. And we're also making great headway with the crypto bros and all the crypto degens, everyone that said, I got to trade this altcoin, or I got to trade on that, or I need leverage, and they made fun of the Bitcoin maximalist and the ones that want to self-custody. And I think that now you won't find anybody in the crypto industry that would make fun of Bitcoin's principled approach.
Right.
And I think that if you go on CNBC and you look at the conversations are clearly, we can't really be trusting these wildcat, Wild West crypto casinos, and we need to be more responsible. The industry needs to grow up.
Bitcoin is currently trading roughly at 16.5K, which is a decrease of 75% compared to its all-time high of around 70K reached last year. However, the asset is still a long way from its finest days. Saylor's high opinion of Bitcoin and his hope that its value will explode in the years to come have not been affected by the protracted bear market. In June, he maintained that the coin is far more effective financial instrument than gold, and he predicted that its value would sooner or later skyrocket to $1 million. In September, he increased the stake of his audacious forecast by claiming Bitcoin's value might reach $500,000 within the next 10 years if it achieves parity with the market capitalization of gold. The executive chairman of Microstrategy believes that the price of the coin might potentially reach a new all-time high sometime in the next 4 years.
Yeah, the only thing that is clearly good for Bitcoin is if we were able to disentangle ourselves from the crypto casinos. Right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, These have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin. And every institutional investor would say, huh, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better. Probably they'll collapse, right? And I don't know what's left, but I mean, the argument in favor of a digital security is, wouldn't it be great if I could issue it faster and it traded 24/7, 365, and then someone could, if you said to me, you can take custody of your Apple stock on your Android phone if you live in Zimbabwe, and I can't get a JP Morgan account, I would think, okay, well that's good. I can give Apple stock to my friend in Zimbabwe on an Android phone. So maybe the idea of a security circulating on a mobile network outside of the control of the 20th century banking system, maybe that's a good idea.
So what are your thoughts about FTX collapse and Bitcoin crashes? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video. Thank you so much for watching.